In the event that we continue saying Tesla stock costs dropping, I'm not excessively staged now, as I feel like I see the genuine worth in this organization, by which I intend what the market says in it. In the past, I've been too centered around essentials and more what is quantifiable, as opposed to attempting to put a worth on future Tesla or Elon wizardry, and understand that in spite of the distance away Tesla might be from fundamentally expanding benefits, it's not as significant with regards to the stock cost of this organization. This is a lot of a development organization. And like Elon said, the reality they actually have good free income regardless of such huge capital ventures, as well as the way that there is financial vulnerability that it's influencing customer certainty, and they are less able to make enormous buys like new vehicles, and afterward, the way that loan fees are high in influencing vehicle costs, and the way that Tesla have still been extending their stock and expectation at high rates comparative with the remainder of the business, yet ready to remain income good, is extremely great. It suggests that if Tesla is able to sustain its enormous level of development on its own, more than $20 billion in funding will be available, assuming that is necessary. Tesla's capex was north of $2 billion in Q2. That is a tremendous sum to spend in a quarter. We are moving toward a yearly capex of around $10 billion, albeit in Q4. This will conceivably decrease fairly when the Cybertruck line moves to gear teeth rather than capex anyway, at whatever point Mexico begins Nevada extension or Super Pack manufacturing plant in Shanghai. We will probably be seeing a few further expansions in capex. As a matter of fact, we might actually try and see pessimistic free income eventually, particularly if digital truck pinions are high to begin with. Yet, like we said, we have a sufficiently huge cushion to deal with this now. $10 billion, or considerably more, a year spent on capex is some serious development. Presently, Tesla has $25 billion in property, plants, and hardware. We're taking a gander at almost 50 yearly increment. This is gigantic development. So maybe to this end, we might in any case wind up seeing 50 CAGR in any event. A few years, this future capex is being spent in regions since Tesla has a superior thought that will work and give a good profit from speculation. Although some of Tesla's previous actions and judgments were not on pace with others, the company has come a long way from those days and now presents a wonderful chance for growth. In a practical sense, Tesla is creating a new industry with no standards. Tesla is learning as it goes along, and in theory, a wide range of different EV companies should be able to benefit from Tesla's disclosures as they learn more about how the EV industry operates. Tesla's momentum approach involves using loft deals with another equal assembling cycle. It was requested to use LOP cells, or possibly a mixture form, but as of right now, are not dependent on development with 4680 deals. This equal assembling line has been a part of Tesla's speculation that hasn't worked out to slope as quickly as we trusted or were guaranteed, but it gives us as much expectation, and again, it might not fill in as well as we were promised to some extent at first, and could set aside some margin to slope as well. But it has crazy potential that can really cut the expense in half. Elon Musk's statement that the cars are worth a certain amount more than I understand suggests that they are more than 20 times as beneficial. But not everyone needs to register their vehicle with the Stream Taxi organization. Therefore, if FSD is resolved, Teslas could be worth twice as much, which would still be a significant increase. Additionally, there's a good chance that Tesla will just produce cars for themselves and register them with the Robo-Taxi organization, which would have all of the advantages of mechanical technology, plus the potential for Optimus to be able to perform important errands at the Tesla plants by the next year, making them fundamentally valuable if adaptable, and again, with endless interest item. The company would be worth 2 to multiple times as much as it is now if any of the many incredible features that Tesla offers materialize. As we've already mentioned, Tesla is investing a staggering amount of money into these potential features. These are the stories that make up Tesla. They may prove to be more credible at times and less reliable at others, but as they gain notoriety, improvements continue to be made, creating a foundation of advancement that provides an ever stronger basis for the stock price. Fates are unimaginably talented designers and a magnetic pioneer who holds every worldwide association at the highest levels. FSD was not prepared as quickly as Elon had hoped, but even so, there has been a clear improvement in its capabilities since then. In a year, whether or not it is addressed, and in the year after that, it will be progressively closer to being addressed, increasing the likelihood that it will actually occur. This is simply the progression of Tesla's new models and information assortment. In addition, there is Dojo, which will continue to advance and become even more remarkable. making significant changes in the preparation of FSD in conjunction with NVIDIA's preferences for handling influence with Moore's regulation. I am aware that many people enjoy talking about the privileges regulation that Kathy mentioned, but Moore's regulation seems to be more appropriate in terms of FSD. Computers will continue to get remarkably more advanced, which undoubtedly benefits FSD. As the movement moves forward, FSD will noticeably improve, becoming more reliable. It is expected to be completed soon. And as the story becomes more plausible, the stop cost will increase along with it. Additionally, advancements in other areas of simulated intelligence beyond Tesla will occur, and the market will start to offer more confidence in the amount artificial intelligence will influence the world, and Tesla is a major piece of artificial intelligence. When we see these large leaps in simulated intelligence, then Tesla stock cost will likewise benefit, as financial backers would rather not pass up the man-made intelligence ratch. It's past the point of no return currently. The market has uncovered its real nature on how it would rather not pass up the capability of Tesla. And this is the point at which it is scarcely estimated in the potential Tesla has, while it's delivering 5 million Gen 3 vehicles per year that cost around 50% of the cost to fabricate, perhaps accomplished in 2026, yet one way or the other huge numbers. And when we begin seeing Tesla bots working at Fremont or different manufacturing plants, in a real sense supplanting human work, and Tesla demonstrating the way that they can truly scale at creation of these bots into the large numbers with an expense of maybe 10 to 15,000 for each bot, then this story will be difficult to disregard and not something numerous financial backers need to pass up the lawn. We'll continue to sell these accounts and support the conviction that they will occur, and over the course of the following couple of years, put maybe something in the locale of $50 billion to back it up. This is a crazy measure of speculation and a bright, unmistakable method for sponsorship. The reality, these will occur assuming they truly do take time, and throughout that time, the market will take a flighty view on Tesla. On occasion, when these accounts become more credible, we'll show a few major leaps underway alongside other outside factors. As they continue to advance, however, there is a greater base that Tesla is setting down, albeit these speculations might influence benefits and free income adversely. The development can't be halted with regards to income, as Tesla keeps on extending with additional items and administrations. Then, at that point, there will be more deals reflecting turnover. This is my view on the stock now. And there are consistently numerous different occasions, unexpectedly, that, as we have seen commonly in the past, fortunately practically broke 300, yet it's taken somewhat of a hit now. And we have loan costs rising maybe on the horizon. But before things can turn around again, there needs to be some positive news. For example, there should be an official digital truck handoff day on November 22. I mentioned that date because it was the day of the discovery in 2019. But any day would be great if the stock drops significantly more. I also think I should try to get a few more choices with expiry dates around key 4 deliveries, as that should be a decent outcome. Finally, keep in mind that I'll be on vacation for the next 2 to 3 weeks, so I won't be around much. If it's okay, I'll be around. Click accept and join in.